The numbers are very confusing. They missed in the parks business. They beat by over $1 billion in media networks, but it's somewhat irrelevant because that was due to basically timing and accounting. Sports costs didn't occur in the June quarter. They're going to hit in the September quarter. I think the interesting points are the topics that you were discussing: the Disney Plus subs, opening Mulan on a premium video on demand, and also starting a new international DTC service. I mean, Disney is going all in on DTC.
Yeah, does that make up in any way for the loss of the theme parks, Alan? I mean, 16.5 million paid subscribers is a lot, but I got to imagine millions of people going through the gates at Disney's theme parks matters a lot more.
I mean, strategically, it's putting them in the right position. The big question on the theme parks to us is how long will it take until they can get back to normality? I mean, in the past recessions, it's typically taken 4 or 5 years until you got back to what your peak attendance was. Peak attendance was 2019. And clearly, even once we get a vaccine, and who knows when that's going to be, there's been some damage to the economy, and a trip to Disney World is not inexpensive. So there are going to be a lot of families that are going to think twice before they book a year out a $10,000 vacation.
I want to look ahead, kind of like my stimulus question, Alan, looking to maybe the third round of stimulus, if you will, which is this fall, Monday Night Football. Okay, we all hope that the NFL goes off. They're trying. It might. If it does not, football is not a sport. It is an industry unto itself. Multi-billion, maybe tens of billions of dollars. I got to imagine that NFL football for Disney, ESPN, SportsCenter, Monday Night Football is a multi-billion-dollar business. If we do not have NFL football in the fall, what happens?
We don't have NFL football. I mean, you've got an issue for Disney for Monday night. Ratings are clearly going to be a fraction of what they would be with Monday Night Football. It's also a huge issue for Sunday for all the other networks. I mean, it becomes, if we don't have football, that would be a huge issue. Now, one thing about Disney, though, I mean, they were very smart. They raised a boatload of cash. They've got over $20 billion of cash on the balance sheet now. So they've got the liquidity to sit this out, wait this out. But yeah, it would devastate earnings, I would think.
Yeah, I've got to imagine that I don't know if that's priced into the stock or not, Alan. Right? I mean, is it? You think it is football priced in?
Yeah, Brian. The way we look at the stock, we have a neutral rating on the stock, a hold rating. We have a $120 price target. What they're doing on the direct to consumer is great, but we do have the concerns about how long it takes for the parks to get back to normal and what's happening to the other media businesses. I mean, COVID is affecting the other media businesses like it's affecting a lot of business. It's accelerating trends that were already occurring. You saw Disney took a $5 billion write-down on its international channel business. Now, I realize it's a write-down, it's a goodwill write-down, it's non-cash, but it's an indication of the value decreasing in those international channels. And over time, I think the value probably starts decreasing in the domestic channels as well. I mean, look at Netflix, which added 26 million subs to this app.